This is not financial advice, not legal advice, for entertainment, educational purposes only, and anything I say is my opinion. Please don't make any financial decision based on anything I say in these videos. Listen, double check you're still subscribed to the channel, double check your notifications are on, and if you hit that like button, double check it's working properly, because these bad actors are doing everything in their power to suppress the channel, because they don't want more people becoming aware of the fraud and corruption in the United States stock market. Listen, everyone knows by now that the FOMC meeting is today. Powell is going to make an announcement on the interest rates, and more than likely, the interest rates are going to stay the same. And I believe there's a slight possibility, not saying it will, there's a slight possibility it will go up. Okay? And I know nobody wants to hear that, but I don't see the interest rates going down. And you know what else supports that? The fact that these banks, these institutions, are having so much liquidity issues that they were kind of forcing the Feds to buy back the Treasury bonds. Okay? The Feds bought back in the last 2 weeks $20 billion in Treasury bonds. And they really want them to buy back $30 billion, but the Feds, I don't think they had the liquidity to do it. Okay? And here's the thing. If they felt that interest rates were going down, or there was a possibility of interest rates going down, they would have held on to the bonds at least until after the FOMC meeting. But in my opinion, indicators were telling them that the interest rates were going to stay the same, or even had a slight chance of going up. Because here's the thing. When interest rates go up, the value of the bonds, the previous bonds, go down, because they're paying a lower interest rate. I mean, it's common sense. If you have a bond that's paying 4%, it's gonna be worth less than a bond that's paying 5%. So if they're selling the bonds prior to the FOMC meeting, they don't believe that the interest rates are going down. Because if they believed they were going down, then the previous bonds at the higher interest rate would have more value. And the fact that they wanted the Feds to buy back $30 billion and the Feds only bought back $20 billion tells you that they are desperate for the liquidity, and everything they are seeing tells them that interest rates are not going down. Is there a possibility? Of course, anything is possible in the United States stock market, okay? A majority of what goes on, in my opinion, is political. It really has nothing to do with the market as a whole, because we all know that they give us the data that supports their narrative. That's what they do. They give us data that supports whatever they want to push down our throats. We saw last year how the jobs data was incorrect, and they knew it was incorrect, and they put it out anyway because it supported their narrative. Bottom line is this. 2 p.m. today, Powell is going to announce whether interest rates stay the same, whether interest rates go up, whether interest rates go down. Based on what the Feds did with the bonds, I can't see the interest rates going down. Not saying it's impossible, but I don't see it, because then they wouldn't have dumped so many bonds right before the meeting. Okay? So more than likely, the interest rates are going to stay the same, and there's a tiny, slight possibility they might increase. Anyway, please leave some comments. Tell me what you think. Do you think the Feds would have been buying $20 billion in bonds before the FOMC meeting if they thought interest rates were going down? Anyway, have a great day. God bless, and I appreciate y'all on this journey with me.